I'm Holly Brawley.
Drivers, when it's time to visit the DMV, avoid the long lines and save time by calling toll-free 833-DMV-LINE. That's 833-DMV-5463. KCAA is your CNBC News affiliate. We're the station that gets down to business.
Welcome, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929 is our telephone number. Pick up the phone and give us a call. We talk mortgages, we talk real estate, we talk anything having to do with value of properties, whether it's in this market or in other markets. This show is being aired and also listened to in many different locations. Certainly the Inland Empire. I want to say hi to everybody out there. KCAA, KMET, and the Roadrunner. Hello, and thank you for bringing your listeners to the show each and every weekend, and up to KCAA up in the Tahoe area. I want to say hi to them, as well as Las Vegas, Nevada, where we are seen on television out there. There are many ways to get a hold of us, to ask us questions about whether it's about the content in the show, about the format, about what we try to do, and it's real simple. I've been in the mortgage industry for many, many years, real estate as well, and I try to bring my experience and what I can bring to you and offer to you by way of answers to questions that everybody has. Look, I was in a deal today. Gal calls me up, and she says, "Can I get out of this deal?" And of course, as the buyer's representative, I said, "Absolutely. All you have to do is say, I want out of this deal. Can I get my money back?" "Yes, I can." Now, that seems like a simple question and answer. And I've been doing it for, like I say, over 25, 30 years. But to someone who's never had the experience before, a new-time buyer, $700,000 townhome, and I'm saying, absolutely you can get out of it. Do you know the reassurance you get when you talk to somebody that knows what the heck they're talking about, as opposed to, "Oh, no, ma'am, you need a reason to get out"? There are those agents that still ask for reasons. Within the 17-day window of a contingency period, you don't need any reason. You can get out because you just are afraid, or you don't want to do it. You got cold feet. You found out that the wind blew too hard, and that in this case, that's exactly what it is. The wind blows too hard in this neck of the woods over here in the San Fernando Valley here in Southern California, and she just doesn't want to subject herself to that night's sleep night after night. She's got kids, she's got concerns, being out there in the middle of nowhere, and I totally understand it. But this is why the show exists. We bring guests to the show, 2 or 3 guests every week. They're from either a lending institution, or they're real estate agents, or they're in any number of disciplines, from people to protect you in the security area, from people who want to fix up your house, decorators, painters, plumbers, any kind of person who can affect your decisions, whether you want to buy or sell real estate, and also whether you want to take money out of your house and buy another piece of real estate so that you can get into that market, that renting market, that terrific ability to be able to rent and then collect rent from somebody. It's just terrific in terms of an investment for you, long-term or short-term, and again, that's why we're here. If you want to get in touch with us, info@malibufunding.net. That is the email address. If you want to see us on YouTube, that's terrific. But we've got a website that you can see this show. As you can see, if you're on our website, themortgagevoice.com, you can see this show, which is our radio show, The Mortgage Voice, and our Las Vegas Real Estate Show, which airs each and every week out in Las Vegas on channel 18.8, as well as channel 47.4. You know, with the advent of the SEC releasing a lot of these sub-channels. Now, a lot of people don't know what they are, but broadcast TV exists. And if you get cable or you get satellite TV, and again, if you're in certain areas where you don't get cable, you certainly always have the option to get satellite or broadcast, which are back to the old televisions with the antennas on them, and so that you can receive a signal. That's what we're on. We're on broadcast television, and so for many, many people who do not want to pay for either cable or satellite, it's the option. It's how you do it. It's why radio works so well when you're driving around. Why? Because for most people, they just turn it on and it's there. It's a comfort. It's something that you can rely on each and every week. I listen to sports talk radio a lot, news talk radio. Why? Because I'm an old guy, and that's what old guys do. So we drive around on Saturday and Sunday a lot of times listening to the radio, and I'm comforted by the fact that I know the show is on each and every week, and I can turn it on. Whether it's the guy talking about mortgages, whether it's the guy talking about high tech, whether it's somebody else that I'm just used to listening to. Well, that's kind of what we do with the Mortgage Voice when we're on Saturday and Sunday out in the Inland Empire. And again, thanks very much. A lot of things going on in the real estate and in the mortgage world. We have seen prices go up a little bit in the mortgage rates, and why is that? Is because the economy is going through a bit of a stumble, a little of a hiccup. Obviously, we've had threats of trade wars, which is why the stock market itself has been a yo-yo for the past week, 2 weeks, down 700, up 500, down 1,000, up 1,000. It is really maddening, and this drives the market's crazy. Certainly the bond market is going to be in demand a little bit more because that's a safe haven when we've got volatility in the stock market. And when that happens, we seem to get a lower tick on the mortgage interest rates. So we've got 30-year interest rates averaging just over 5.5%. Throughout the country, and if you go to any number of different websites, you can get the average. If you want an exact quote, of course, you have to call or go to either a lender, a mortgage banker, or a mortgage broker to try to get yourself a quote. And as I always say, it's better to shop around. The person that I was talking about earlier, who we were in negotiations for a unit, got into a unit, and then she wanted to get out of the unit. But the entire time, and I didn't have anything to do with the mortgage at all, I was trying to explain and help her because she had 2 different lenders competing for her particular business, which I always think at that early stage when you're still not sure who is going to give you the best deal, why not interview 2 or 3 people? I mean, it doesn't hurt, and you get the information right in front of you after a short little visit with them that they have to send you out a loan estimate. When you get that loan estimate, if you've got 2 or 3 loan estimates, you just compare them side by side, see which is the better deal, or even play one against the other. At some point, you will choose somebody who you're most comfortable with, and sometimes it's not even about price. It's about, do you like the person? I'm lucky that I don't have to struggle for every dollar. It's not necessary for me to make a killing on each and every deal, and that's a good thing because most consumers know right away when really your main concern is to collect a paycheck. What comes out in a good fiduciary is the fact that the care for the borrower or the care for the buyer, the person who you represent, is much more important than the care for the mighty dollar. And it comes out in many subtle things that you will or you won't say. I have a real estate agent that works for us, and she was is now in a deal, $3.5 million over by the beach, right? And it's kind of a fixer. And this is a funny thing about real estate in Southern California. You could have this same property in different markets be worth, millions less or millions more. It just depends on where you are. It's the volatility of the market. But in this particular market, it's worth a ton of dough, maybe $3, $4, $5 million in that range. And it's a teardown. It's a fix-up. And we were going back and forth about what needs to be in the contract, what needs to be not in the contract. So when I'm talking about this other borrower, and she's and I represent her as a real estate agent, she is basically saying, I want to work with this lender, or I want to work with this lender, and I need credits, and I need all kinds of things. The main aspect of what I'm trying to say is when you're out there and you're looking for someone, you want to look for someone that is easy to work with, knowledgeable, and has you at the center of what they consider to be their job. It's called fiduciary, and certainly in the mortgage world they have it, and in the real estate world they should have it. It's not necessarily a codified thing in California law or in some of the other states that we represent buyers and sellers as real estate agents, i.e. Nevada. They don't have that codified, but it should be because there's a lot of money at stake, whether it's this beachfront property or whether it's a condo out in Vegas for $160,000. It is still a lot of money, and you should have somebody that you're trusting with the decisions that you're trying to make to give you the best and possibly most advantageous answer. Anyway, I'm Jeff Barton. I'm your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to the Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry, 888-713-2929. That's our telephone number. Pick up the phone and give us a call. During the first segment, we were talking about representation. We're talking about working with people that are comfortable for you to work with, also knowledgeable and honest. Honest is the main point that I wanted to make in that first segment. We try to bring to the show a lot of people who work in the industry in different ways, different capacities, and there's a great deal of opportunity out there in every market to make some money. One of the guys that I had on the show a couple of weeks ago, I'm bringing back because I really enjoyed John's approach to how he's helping people, as well as the educational value he brings to his clients. It's John Lee from the Outback Real Estate and Investment Network. John, how are you?
I'm doing fine, Jeff. Thanks for having me again.
Thank you very much for coming back. I just want to have people understand exactly what the Outback Real Estate and Investment Network does, and what kind of value and what kind of information it'll bring to potential clients.
Absolutely. So the Outback Real Estate Investment Network, the Outback for short, is a community where people can find resources and network with other investors, and that allows you as the investor to be able to leverage the power of real estate and elevate your financial position. So that's what it's about.
And the education that you bring to the borrowers, or rather the members, this is gleaned obviously from your personal experience and what you've been doing. Explain a little bit to the audience how long you've been doing this, and a little bit about your track record.
Absolutely. So I've been an active investor since 2012. I've been in the housing industry since 2006 after I got out of the Army. And what I learned as a new person when I partnered with my business partner and learned from him, actually, his name's Mark Collard, everybody calls him Coach. But what I learned from him is fundamentals are key, and 90% of everything that we do is mindset. So that's where I'm coming from whenever we create training, or whenever we do training with people. That's always the context that we come from in the Outback. So.
Yeah, I appreciate that. I joined the Outback. You probably know that already, just so I could see what was going on, the interesting aspects of what you guys teach. And that's the next question, is when someone gets cold feet. I was talking earlier segment, I have a buyer, they're in a unit, and they get cold feet and they're out. What's the problem most of the time with people? You were mentioning mindset. Explain a little bit about what that is.
Sure. Well, some people get cold feet because all of a sudden it's about to get real. Like, hey, I got under contract, we got escrow, and, hey, closing's this date, and all of a sudden it gets real and people get scared for whatever reason, and that's normal. But one of the things that I promote, like a lesson that everybody should understand, is risk is relative to what you know. Okay?
Okay.
So while for whatever reason this person got cold feet and backed out, for whatever reason they might have thought it was risky or something else, but risk is relative to what that person knows. If they understand enough about that transaction, that type of buy that they were doing, and they understand it, then chances are it's not as risky for them. There are a lot of things that I do that are a little more advanced on the investing side, based off my knowledge, that a lot of other people are scared to touch just because they don't understand it completely.
Yeah,
so,
go ahead. I'm sorry.
No, so I was going to say, if somebody doesn't know enough about the situation or doesn't understand enough about the financing, the structure of the deal, or the process of going through it, it can seem big and hairy, and some people can just, back away from it. So.
Yeah, and the hand-holding or the encouragement, at the end of the day, it's really up to the investor, right? I mean, it's not something you're pushing people into, but you can show them by your experience how it's possible that they can get by their reluctance to do the deal. Absolutely.
Most people, Jeff, the technicals of real estate are actually easy, and I'm not trying to minimize anybody's knowledge of it. But the technicals of real estate are really easy. Normally it is the mindset piece. And for a lot of people, I can tell them how to buy a house, how to go buy a property, and what the steps are. But, they might be kinesthetic learners, or they might just be scared. and they just need the hand-holding. They need to see it. They need to experience it, and they need to rely on our belief, to complete the deal before they can fill it themselves. Some people are like that, so it's just what it is.
Yeah, and explain a little bit about the membership to the Outback, how that works, where you guys are growing, what cities you're expanding to.
Absolutely, absolutely. So the Outback is based in Las Vegas. We're the largest real estate investor meeting in Las Vegas. We've been around for over 6 years. In San Diego, I have partners down there that run the San Diego Outback, and it's been around for 3 years, and it's growing at a nice clip. It's a nice, stable meeting out there, and it's going well. I also have a group out in Charlotte, North Carolina, that is newer. It's been around for a little over a year and a half, and it's just starting to grow. And I got a great guy named Corey Goldstein that runs it out there. Our memberships, we have annual memberships within our group, and the annual membership has all of our meetings if you're local, but also gives you the ability to stream in to our Las Vegas meeting if you're outside the local area. I try to pack as much value into the memberships as I can. So I have a 2-day capital funding summit that'll be coming in August to Las Vegas. That's a $300 ticket that's thrown in there. I have member-only events. I have member-only webinars. I have all kinds of stuff to help and all kinds of resources to help the investor get transactions done, or at least set themselves up so they can get transactions done. Everything from credit analysis, personal credit analysis, opportunities to tie into legal and tax advice for very little. All these things are stuff that I throw into the Outback as a member, so you have as much as you can to again take your business to the next level, to have those resources and that networking available for you.
Do you find that you have newer people, older people, people who've been around a while? I mean, what is the average kind of profile of somebody who wants to use the Outback or join, or is it kind of all over?
Well, it's kind of all over, so I'll kind of give you a demographic breakdown.
Okay.
If you take 100% of our people, and I've done a couple of demographic surveys, so I know this for a fact, that basically a third of our people make, over $100,000. The next third makes somewhere between $50,000 and $100,000, and then we have another third that make less than $50,000. We have the group dynamics are about a third of people over 55, a third of folks around my age, somewhere between 30 to 55, I guess you could say. I'm 40 years old.
Right.
And then we have a good third or so that are generally 30 and under. I'll tell you right now, most of my people are new when they come in. They want to understand and learn investing.
Right.
So that's what they do. A good 20% of my people are really on the grind and really, really making things happen, having momentum. And that's just, the 80-20 rule kind of stretching across everything. So.
Every sales job is like that. 20% of the people do 80% of the business. And that, for some reason, it's always like that. Even though you might have a huge sales force, that's always seems to be the way it is. Hey, John, can you shout out your phone number or a web address in case somebody wants to, which I'm sure there are people out there who are listening who would like to join?
Absolutely, absolutely. The easiest way to get a hold of me is honestly just text. Text me at the following phone number, 702-518-3652. Again, 702-518-3652. Let me know what kind of help you need. Let me know where you heard me from on the radio, and I'm happy to go out of my way to help you. I'm still a small enough operation that I can give people personal service and point them in the right direction without any problem.
Well, yeah, you know what? I think that's the most important part of what we talked about previously when I met you, when you did the TV show and the other previous occasion on the radio. The personal approach, the ability to get to the guy who's actually the one who's talking on the radio, I think that's important to people because they feel like they're getting pretty good service. So before you grow too big, and if anybody out there listening, make sure you give the guy a call. John, I really appreciate you coming back on the show. Once again, give us your experience in the real estate investment world from the Outback. Thanks very much.
Really appreciate it. Thanks for having me on again.
Thank you very much. And I'm Jeff Barton. I'm your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For questions or comments, send emails to info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929 is our telephone number. Pick up the phone and give us a call. We talk mortgages, we talk real estate, we talk anything having to do with your decisions. Your decisions are based on information. If you don't have the right information, you're just not going to make informed decisions, and that's when you can really get hurt in the real estate world. However, 90% of people who are millionaires in the U.S. did it through real estate. And why? Because it's not that hard. I mean, really, guest that was on in the last segment was talking about the technical aspects of buying and selling real estate are really not that difficult, that it's really about a mindset and the ability to be able to weed through or wend your way around the little obstacles that come up in each and every deal. A lot of people that come to the show are new to the show, and we're really happy when they come on board because they present new and different perspectives as well as programs and experience that you can learn from. And this next guest, our next guest, Kim Tran, is no exception from AM West Funding Corp. Kim, how are you?
Good. Thank you, Jeff. Thanks for having me here today.
No, thank you for coming on the show. You know, you and I were just talking about issues in individual loans and how you deal with loan officers and processors. And I really liked what you said about, you know, being clear and concise and having someone who's on top of it. Explain some of the problems that you might get with somebody who isn't like that.
Yeah, Jeff, you've been in the industry a long time, and I've been through maybe one or two cycles.
Yep.
Today's world, processing loan is not like the old days. When I said old days, more of like referring back to before 2008.
Right.
It was pretty easy. Previously you can pretty much take some basic info from the borrower, the client, and maybe put together application and, a few of the escrow purchase contract, and you have a loan, and then there goes the loan. But nowadays, especially with, QM regulations, there's a lot more compliance forms. And
yep.
I think a processor who's been through the ups and downs of this market would be very familiar with what I mean by be prepared up front,
right.
Instead of just slapping something together, submit it to a lender, and then take the chance if you're going to get approved on that.
AM West, we're new to AM West relatively, right, in the last 6-8 months, and we've been impressed with the programs you guys offer. Explain a little bit about how you guys can benefit some borrowers who are out there who might not necessarily fit into the traditional conforming box.
Yeah, sure. Yeah, Jeff. There's a lot of lender choice out there, and then every one of them are good. I would say every lender have their specialties, whether it's on the pricing, the service, or the warehousing,
yep.
the assets. With us, we have all that's offered in the market. The general market, which is Fannie Mae, Freddie Mac, and government loans. On top of that, we do see that there's a sector of the market after 2008. A lot of the buyers are left out of the market, mainly because it was a bad market. Certain people didn't file maybe enough a tax,
yep.
or you may have a borrower who are self-employed, and of course, they will take advantage to write off as much as they can. But when it comes to doing loans, that may be a little bit shy on the debt-to-income service.
Right.
So we offer two special programs. One we call it alternative docs, which is very similar to stated income.
Okay.
Where we don't need tax returns. We won't run your transcript. We pretty much will ask for you, if you're a business owner, we ask for a profit and loss statement.
Right.
And we'll check to see if the figure makes sense, and then we'll take the face value of it. If it's for a salary borrower, we need the employer to, complete a handwritten verification of employment.
Yep.
The last 2 years' income and year to date, and we qualify off of that.
I see. And let me just ask you a quick question on these two programs. Are these equity-driven programs as well? I mean, do you have to have more down payment in the property, or are these what kind of DTI are you looking at here?
Yeah, for down payment, for purchase, what we do this for purchase, for rate and term, if they've gotten hard money, private money loan that's high interest rate,
right?
We refi them. But it gives for purchase. Of course, since we, the lender, takes a little higher risk, not checking the tax returns and all that. Of
course.
But the down payment requirement would be a little bit more.
Okay.
The minimum down payment would be 25% down.
Okay.
But then you get a decent interest rate, 5.125 or so.
Right, and that's not, what is that, 3/4 of a point off prime right now? I mean, off general conforming, not too bad.
Actually, we started out with only 4.75 interest rate.
Wow.
When, the agency pricing about maybe 3.7 or 3.8.
Oh, I
So
see.
would say about,
Point off, 3/4
4.
to a point off of what it would be on a conventional conforming, right?
Yes, very similar.
That's very good for that kind of a program. How successful are you guys in that, in terms of rolling it out here in, California?
I would say that we rolled this program out maybe about a year and a half. And I know that prior to us rolling it out, there are some lenders out there offering that. But the experience wasn't too good. With ours, we knew that what's lack of the program that's out there, we make some tweak to it, and we've been very successful. We're funding about, my lender's at roughly 30 states.
Right.
In multiple states.
Right.
We're funding roughly on this program about maybe 120 to 150 million monthly. So
That's a
it's
big
very
number.
successful.
That means you're doing, well, if you're $250,000 is your loan size, I mean, you're doing 400 loans a month.
Yes, we're doing. Well, of course, not myself. I mean, throughout the company in the different states.
Yes.
But California being one of the largest market that we do these loans.
Yes.
It's been very successful. We started out with very restricted guideline with max loan amount to 1 million, to the point where now we increase it all the way up to 5 million. And the FICO score requirements, we also started out with very high at 720. Now it drops all the way down to 640. So the door just keeps opening wider and wider.
Is that because there's an appetite on the secondary market for these loans, or do you keep all the loans?
Well, for these programs, we actually are direct seller and servicer.
I see.
On the loan.
Mm-hmm.
And also with Fannie, Freddie, and Ginnie, government. These are sometime now in the secondary market. I won't have too much info, but I'm pretty sure that we fund these loans, we service them, and once it becomes the bulk, we may sell it as a chunk.
I see, and the appetite for that kind of a product is not obviously with Fannie or Freddie or Ginnie, but it is with either sovereign or some kind of insurance or hedge fund. These are the people picking up those kind of portfolio products?
Yes, and actually over the last maybe 3-4 years, you have noticed that there are, similar programs that came out. Prior to this all-doc, there was the bank statements program where they take your bank statement deposits to qualify.
Right.
Those programs are still around, but these are a little bit easier, where you don't have any debate which deposits can be used towards your, count against your income.
I see. Now, how do you see lending getting a little bit easier, or do you think that this is pretty much it for the year? I know we're in the beginning of the year, although it's April already, if you can imagine that. But I always look towards, the next 5, 6, 7 months. What do you think is going to happen, both with rates? I think rates will go up, and also with programs. I think they'll get a little bit easier. What do you think?
I think, on the program portion, I think more and more these lenders, investors will come out with a little bit flexible, easier program to qualify. Because, the market, economy is becoming healthy again, people are back at work, and, it's great. But on the other hand, on the interest rate, since you're taking some risk, and also since we've been spoiled with over the last maybe 5, 8, 10 years or so,
almost
with rock bottom U.S. record lowest rate.
Right, that's exactly what.
Right. Is that I think the chance of interest rate going up, it's very likely.
Yeah.
To go down, it's very slim.
Very slim, unless we get some catastrophic event where everybody escapes to the bond market, and then that drives the rates down. Hey, Kim, thank you. I want to let people get a hold of you if they want to contact you directly. You want to give us a phone number?
Sure, yes. My phone number is at 626-378-6999. And sometime if you can't get a hold of me, please do send me an email. My email address is at kim.tran@amwestfunding.com.
Thank you very much. That was very informative, and you did great. I really appreciate it. This has been Kim Tran from AM West Funding Corp. Kim, thanks for coming on the show.
Thank you so much, Jeff.
And thank you very much. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to the Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929 is our telephone number. If you pick up the phone and give us a call, we're going to help you in decisions that you got to make about whether you want to buy or sell real estate. A lot of it has to do with the property, where it is, the location, the desired use for the property. But I would say that if you're buying and you're a new-time buyer, maybe you're an old-time buyer, you've been doing it a long, long time, financing is key. And in our last guest, he was talking about certain programs that they do for that particular group and lender. And we're going to bring another guy on the show right now who is working for a company called The Lender. Really appreciate him coming on. First time on the show, talk to you about other programs and how they do business. We want to do this now in the spring. Why? Because this is when people want to buy houses, and really competition is fierce. And Ryan Mercer, the account executive over at The Lender and local company here in Southern California. Ryan, how are you?
Good. How are you?
I'm just great. Thank you very much. Thanks for coming on the show.
Yeah, you're welcome.
Okay, great.
For having me.
No problem. Like I say, I mean, what we do, we try to bring some great information to people, information about different competitors in the lender business. And I know that you're fairly new in terms of the company, but the idea of what you're bringing to the company is not new. Good service, good programs. Describe a little bit about what you guys are and what you're trying to do.
Correct. We are a DBA of Pacific Union Financial, which is a large company that has, been around for a long time, large servicer, do a lot of correspondent lending. And, we partnered up with them to start up a wholesale brand. And the guys that I've partnered up with have been very successful in the past at these startups, and that's why Evan Stone, the owner of Pacific Union, wanted to partner up with us and help build his portfolio of servicing with the wholesale that we're doing. So we're leveraging off their pricing, which is industry leading in most buckets right now.
Right.
For the FHA, VA, and conventional. They have aggressive programs going down to 500 FICOs to help those borrowers that are maybe a little bit credit challenged or just leveraged with credit, and their FICOs are a little bit lower. So FHA, VA, and conventional is really what we're doing. Now,
in the programs that you just mentioned, and your take on it is that credit-challenged people would be some of the areas that you would be strong at. Do you find that, do you portfolio these, or do you sell them off to Ginnie? How do you guys handle that?
Yeah, we keep them in-house. We service everything here. That's where Evan Stone kind of makes most of his money. Is he has, I think it's upwards of $27 billion in servicing right now.
Right.
And he wants to keep growing that. So we keep that here.
Well, it's an important distinction to make, because I think the listeners, when they're trying to get a loan, they don't understand the secondary market. They don't understand why one product might be with one company but not with another. But explain, as you hold on to the loans, why this gives you an opportunity to be able to service more more borrowers.
Well, again, it's different programs that we can offer on a refinance. We can cut fees and do different things and lower interest rates, because we're making our money really on the servicing end of the loan, where we can give discounts on the front end because we can make less money on the front end versus and keep it and make more money on the back end. So we're able to offer a lower rate or discounted underwriting fee or whatever it may be that we need to help a client out.
No, I think that's very important, and I think there's a lot of choice in the borrowing when you're going to get a loan, right? There's just a ton of different decisions that you have to make, and the subtle distinctions to some are big distinctions when it comes to, can I help this person out either with a lower FICO score or can I give them a bigger credit? I think that's one of the advantages that you have, one of the reasons I wanted you on the show.
Correct. We do have that, and we look at every borrower individually differently. We look at the reason why they have a lower FICO score. Was it a medical issue, something that was out of their control, that they were perfect up until a certain point, and this is what they can document on why this happened, and maybe why it wouldn't happen again, or certain extenuating circumstance that we can stand on that. Hey, this is actually a good client, a good borrower. We're here to help them out.
I think that's very good, and the idea that you can do some manual underwriting, which is quite a bit different than most companies that just go AUS and that's it.
Yeah, all the way down to a 560 FICO score as well. So we're here to help, the higher clients as well as the ones that may be credit challenged for one reason or another that may be out of their control.
I have a son, right? Actually, I have two sons and a daughter, but one of my sons is graduating college, and him to go out and start his career, figure out what he's going to do. I know that when you start a business, and you have all just joined up to start in this business, there's a lot of energy that's needed, absolutely, but there's a lot of also, I guess, nervous feelings about trying something new. Give me your idea of why you get into a startup situation. I know why I would do it, but I think for people out there in this kind of economy, there's a lot of people who want to start their own business. Give us your idea and your explanation of how come you got involved with it.
Yeah, well, for me, I was presented with an opportunity, some guys that have been successful in it at the past. So I think, one, it has to do who you're partnering up with and their resume, what they've done in the past. And, you take a pride in what you're offering and being able to kind of work for yourself and work hard and make the money for yourself and take pride in that. And for me, I've worked for lenders in the past, and, it's been great, but presented with an opportunity to have something that I can call my own or a percentage of my own.
That's right.
And take pride in that. And when you work late, you're working late, for you and your family. And, it's all about who you're partnering with. And for us, Evan Stone is a very successful guy in this mortgage business. And, it was really a no-brainer for me when I knew he wanted to be part of what we're doing here.
Now, that you describe perfectly the business owner out there who strives to do something on their own. Ownership, it's control, it's pride of work, it's being able to be on the ground floor of something and watch it grow. If you have a borrower that's like that, how do you help that particular borrower if they're using their business as the source of their provable income?
Yeah, we have some what they call non-QM products,
right?
That we can use, bank statements to show cash flow, qualify them off that. If they have a large amount of assets, but they write off a lot of stuff on their
taxes,
tax returns,
sure.
We can do different forms, P&Ls, and different things to help those type of clients as well. That is an investor that we have a relationship with where they do some of the underwriting. It's not fully controlled here, but we do have a great relationship with investors that can help self-employed clients.
Right. Okay, very good. Hey, listen, can you shout out your phone number just before we get to the end of the interview so I don't forget?
Sure, 714-273-6637 is my direct line.
And this is Ryan Mercer, he's the county executive over at The Lender. It's a company that we've begun to use. It's new into the marketplace, but they've offered some unique and different products for borrowers out there. And being a part of a startup, being a part of a new and exciting company, personally, you get a lot of satisfaction from that, as you said. What are some of the challenges that you might see ahead in terms of trying to establish a foothold in a very strong Southern California market?
Yeah, I mean, obviously, number one is you got to be willing to put in the hours and the hard work. And, with me, my family and my wife and my kids, they support me as well. So when I have to work late, they're all about it. And, it is a tough market and a tough place. But when you have the support of your family and things to be able to back you and push you and give you the extra energy you need, I think you can really do anything.
You know what? I appreciate that. How old are your kids?
I have an 11-year-old and I have a 5-month-old.
Wow. Wow, yeah. That's a challenge right there.
Quite a little gap.
No sleep in your house recently, I'm sure.
Yeah, exactly. My wife, she's a pro. She works full time as well, and my mom's down the street to help support us. So
it's great.
We have plenty of family support, and we're making it happen.
Thank you very much, Ryan. Very much for opening up a little bit about your personal life and explaining about what The Lender does. I really appreciate you coming on the show.
Yeah, thank you for having me.
And thank you very much. That's Ryan Mercer, is the account executive over at The Lender. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For questions or comments, send emails to info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929 is the telephone number. Pick up the phone and give us a call. You know, we have an email address, info@malibufunding.net, and Malibu Funding is the sponsor to the show. Their NMLS number is 79620. I really appreciate that company supporting what we do and how we present it to you. I myself been around about 25, 30 years in the business, started out in sales, got into mortgages, and now we're on the radio promoting what we've been doing and what we're trying to do for you, which is obvious, right? We're bringing information to you, to the listeners, to anybody who is interested in buying and selling real estate here in Southern California or in Nevada or in a number of other different places, whether it be up in Tahoe or whether it be out in North Carolina, Illinois, Florida, up in Washington State. Yes, we have licenses in a lot of different areas, and this show is seen surprisingly all over the place. Get an email last week from a guy in New York State, which we are not in, but he said he loved the show, loved the information, wish we were there, and I do appreciate that kind of reach that the show has. Each week there are challenges in the mortgage industry. This week I would say that if you have money in your stock portfolio, yeah, it's been a little bit of a challenge, especially if you've got to come up with cash for your closing and you just saw the market drop, I don't know, 1,000 points in 3 or 4 days. Yeah, that's a problem. If you're on a fixed income and you've got a 401k or you've got some retirement benefit that is in the stock market, yeah, that's a problem. I have a brother who lives in New York, consequently he got out of the market when the volatility started about 6-10 months ago. He just had enough. He was, you know, in a fixed income situation, couldn't see his principal dwindle and was really scared about the market. I think that's a strategy. Depends on how old you are, depends on what your needs are. His particular needs were not losing principal. And I have another friend here in Southern California down in Santa Monica said the same thing to me. Now she's somebody who's probably past 65, and as I was telling Daryl off air, I had my birthday yesterday. What do you think about that, Daryl? 63.
It's better than the alternative.
Yes, yes it is, and I think that's the point what I'm trying to make. If you're out there right now and you're listening to The Voice and you want some information as to how to invest your money,
have as many birthdays as you possibly can.
Yes, exactly. Don't have an expiration on those birthdays. You want to keep them rolling, keep them going. That's
absolutely.
That's what you want to see it.
Stay regular.
It's exactly right. So if you're in the investment area and you're worried, you really need to talk to somebody who's in that field. I'm not in that field, although I have money too that's invested in the stock market. I have money invested in real estate, obviously, and still have a job, still working. I'm only, as I say, 63 years old. Daryl, what's the age that most people retire nowadays?
You keep kicking the can forward. First of all, there's no such thing as a pension anymore.
No, not for me.
There's really no such thing as 401k contributions from your employer. It's just money that you can put away. There's no matching, pretty much, at this point. So, I mean, I think people work longer, first of all, because they have to.
Right.
And second of all, because, you know, you hear these horror stories about people that retired and then they pass away.
Right.
Because it gave them a purpose. It gave them a reason. It gave them a reason to get up in the morning and just, you know, sitting around the house drinking coffee and staring out the window doesn't do it for them.
No, and I have this...
Especially people that are driven.
Well, you know what? That's exactly right. I have a father-in-law who's 86. His health is not good, and I want to go over to him and just say, hey, what are you doing? What's your next project? What are you going to get invested in? What do you want to, you know, do? Do you want to, you know, he was in restaurant business for a while. He owned a couple of companies. But this is a guy whose mind is still active, but, you know, is dwindling away because he's just not occupied.
You know, my grandmother lived to 87 until she was 86. She was the accountant for a company that was next door to her house. She would walk back and forth through their books, blah, 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 blah. She quit and lasted less than a year.
Well, I would say that older people over 60, let's say, or older people, probably pretty good employees, because really that's what they like to do. They like to work. They like to stay busy. It's not necessarily a financial thing, although I think for some people it is. But I think a lot of people at that age have some savings, some retirement, although I saw a very scary statistic that half the people our age, Daryl and I are similar in age, have no retirement.
Yeah, she didn't need the money.
Oh, she didn't need the money. So for her, it was a perfect way to get through it. Okay, I wanted to get through a little bit of news to use here in this section of the show. Home prices continue upward, defying predictions. Thanks from Jan Swanson over at Mortgage News Daily. And again, this is a great website that I go to every day, and I talk about it on the show. We had the CEO on the show, or the chief financial officer. He was a great guy.
Yeah, he was funny. He's the editor-in-chief, but you can't talk to the reporters.
No, it's funny. I want
crazy.
Jan on the show, and then there's another guy that we quote all the time. So in her article, which quotes February numbers, really, it talked about the national increase in prices across the country in February this year to February last year, 6.7% average, which is about what we've been predicting and holding steady for the last 3 or 4 years.
Those are big numbers.
I think they're unsustainable, but you know what? People have been saying we're going to have some kind of a recession, some kind of give back. I don't know if the stock market correction is happening or if it's just about the trade war issue, and that's why the stock market's up and down like a yo-yo. I don't know, but I think that's what it is, but I'm not sure.
Well, I mean, in our lifetime, we've seen double-digit inflation. We've seen, and actually, with double-digit inflation and the interest rate that high, we were doing pretty well.
Well, I mean, if you're referring back to the 80s, where you could have a CD at 18 to 20%, but your mortgage would be 18 to 20%. It's relative to what you think is good. I think a lot of people get so spoiled, and I think Ryan Mercer, our guest on the last segment, talked about it. You get spoiled at these low interest rates, and you think that that's the way it's going to be forever, which of course it never is.
But back in the day, savings account would pay interest, checking account would pay interest. I mean, no matter where you put your money, it would multiply, and that's not the case anymore.
Well, you know, I read an article yesterday. It talked about online savings accounts through online banks rather than having a brick and mortar.
Like Allied.
Allied is one of them, sure. Even American Express is an online bank, and I'm thinking of putting some money into one of these accounts. Now, granted, it's less than 2%, but it's not zero, which is my account, which I currently have, which is 0.004%. That's what I get.
That's crazy.
It's ridiculous. I think the highest ones I've seen are mid-twos, but the one I was looking at, the American Express Bank, is 1.75, and that was as of yesterday. So if you're out there and you're thinking, okay, maybe that's an alternative, I think they're all FDIC insured, which is a good thing, up to $250,000?
Yeah, I think it used to be $500,000 at one point, depending on how many multiple accounts you have.
Oh, is that right? Is that one of the issues? You have to declare how many accounts you have that are insured? Mm-hmm. Oh, I see. Because I know a lot of people who have a ton of dough want to open accounts in 15 different banks because
it's cumulative.
Oh, it's a cumulative thing. I see. Very good. Okay, so the home prices and where they are and what they've been doing, I want you to just guess where you think the greatest appreciation has been from year to year. That's February last year to February this year.
By city, state?
The state, the entire country, all 50 choices. You get to choose in this abbreviated game of do you know anything, which I don't. I actually have the answers in front of me. So
I always say
greatest appreciation,
Colorado or Nevada. So I'll say Colorado.
Okay, so Colorado is in the 3 to 6% range. If we're talking about the greatest gain percentage-wise, you're talking about a state of Nevada.
Well, I had a 50-50 shot.
You had a 50-50 shot.
I named them both and picked the wrong one.
Yes, exactly. Well, Nevada is an interesting place. Now, we're out there in Nevada, and so if you're looking for property in Nevada, give us a call, 888-713-2929. You can email us. You can call me directly. My Twitter handle, by the way, is at Jeff6493, and you can follow my daily musings and such. But if you need us for Nevada, we certainly can help you there, both loan and real estate purchase. Daryl, thanks for jumping in. I really appreciate that.
Pleasure.
Okay, and everybody who's listening to the show, thank you for listening. We'll see you next time. I'm Jeff Barton, your voice in the mortgage industry.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.